Alright, good afternoon, everybody. What's happening? Yo, yo. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition, position disclosure. I'm in Baidu and Tiger. Wait, am I in NVIDIA still, or did I close that out? Oh, I'm also short NVIDIA. So I didn't add that one on here. I'm short NVIDIA. I'm short NVIDIA. I'm short NVIDIA. So everyone knows I'm short NVIDIA. It's not written on there. You know what? We can even write it on there real quick. NVIDIA. Boom. All right, now it's fully up to date. Let's jump on in. So we got Tesla moving after hours here. Up. I did say in the thing with JR and Mike Como today that it was going to go up, right? The free cash flow number is great. The free cash flow number has been a problem for Tesla in the past. This third quarter free cash flow, $2.74 billion versus estimates of $1.61 billion is a really solid beat on that number. I think that's like the most important number I'm seeing on here so far. Third quarter revenue was a small miss. As adjusted EPS was a nice beat also, 72 cents versus estimates of 60 cents. Tesla is expected to achieve slight growth in vehicle deliveries in 2024. Energy storage deployments expected to more than double year over year in 24. So that's ramping up. Vehicle fleet continues to grow. We expect continued profit growth from these businesses over time. Cybertruck production increased sequentially and achieved a positive gross margin for the first time. Shanghai Megafactory remains on track. Gigafactory Texas expect to have 50,000 H100 capacity by the end of October. I don't know what that means. Have we seen guidance numbers yet? I'm not seeing guidance in there, but yeah, the Tesla numbers look pretty good. Sorry, 1 second. The Tesla numbers look pretty good here initially, but we're not seeing any guidance, so things could still move, things could change, but we'll see. The measured move was to, Bill posted the exact price in here. I had estimated it in my head. I had estimated it at like 231-ish, 231 quarter. So I did take a cute, quick short the first time it got up there and got out of it already. And I just still have my very small swing that I have left in it on the short side. So give them back a little bit of open profit, but it is not a big deal at all for what I'm up in it. And we'll see what this looks like tomorrow. This is honestly the area in this 230 area where even technically I'm looking to reshort. It's kind of like a gap fill on the Cybertruck if you include this tail. Really, it extends up to 232.34. So it's this 230 area that I'm potentially interested in shorting it, but kind of going to wait and see probably for tomorrow at this point. So yeah, so that's Tesla. Nothing else to say about that. We have IBM out after hours as well today. Seems to be the other biggie. Ooh, IBM not so good. Not really seeing any numbers except their third quarter revenue missed estimates. Got LRCX is out, I think. Trading up. Okay. Let's talk about the market. The market was interesting today, and the market's now trading up after hours. So including the uptick after hours, which is about 60-something cents here, The SPYs are down 0.8%. Did we close? Where do we close compared to that 1% number on a closing basis? I only have the after hours number here, which includes a 60-cent uptick. Did we close worse than 1%? 0.95%. Yeah, just curious for how it impacts the realized volatility for the vol control fund. So less than a percentage point. So yeah, including the after hours move down 0.8%, but still a pretty nice down day. Qs are down 1.25%, and that's with the Qs up $1.50 after hours. So the Qs were actually on a closing basis were down much more than that. And the IWM was relatively strong today, but with a big grain of salt, it's like a day 4 down for the IWM. So only down 0.8%, and that includes about 25-cent bounce back that's continuing here after hours off of Sunday's earnings reports. So the question of the day that I don't really have an answer to, because it kind of feels like we're right in between, is today a day 1 or is today another save? It seems like this market keeps saving itself just by the hairs on the back of its neck. I think I'm butchering expressions. I've never been good at expressions. But it seems like the market has just barely saved itself again, potentially. Or is it a day 1 to the downside? Looking at this daily candle right here in the SPYs, but again, it also includes this after hours bounce, it looks like this is a save. This is a decent downside tail here. We had a pretty nice rally in the last hour and a half to bounce back from. Look at the low. 574.50, almost on the dot. This is the daily chart level I've been saying is so important for this market. Perfect hold of big support. 574.50, super important level. And we bounced back intraday all the way back to 578 for a close, basically, which is a really impressive snapback. $3.50 bounce back in an hour and a half. And now, again, we're up another 70 cents here after hours. So is it a day 1? Is it a save? I don't know. It's kind of hard to tell. The degree of the downside tail kind of looks like it's another save. But I could easily see the argument for saying it's a day 1. All the same, we know the importance of 574.50. I've been talking about 574.50 ever since the day we got above it. So I'm not surprised to see that we held it literally to just about the penny on the downside today. The Qs, take a look at the Qs. Also, again, this candle with this tail here, we're up $1.50 from where we closed. So really, it would be a candle that would be closer to down to like here. So a little bit less of a tail. Is it a day 1? Is it a save? So we lost the low from 2 days ago, which was important for the Qs. We definitely closed below that. The second important spot was this 487.50. We closed above that. So we closed above 487.50, but we closed slightly below the 21 EMA. So I would argue that we still kind of held support 2 for the Qs. So same deal, a little bit difficult to analyze if this is a day 1 of selling or if this is another save with the degree of the tail that comes in. Typically, I want to see a tail at least 50% of the candle to think it's more like a save, that buyers came in and they saved the day. We kind of are right around that amount. And, including the after hours bounce, we definitely have the 50% amount. Without it, it's a little bit less. And pretty much same thing with the SPYs. So looking at this market, again, it's really difficult for me to look at this market and think is it a day 1 or is it a save. It feels like right on the borderline, and tomorrow's price action can potentially confirm it or not. And that's with Tesla coming out to potentially try to save the day. It's like these technicals keep looking to me like they want to break down, and then we get TSM to help hold us up, and then we get Netflix to help hold us up, and now we get Tesla to help hold us up. So really hard to say, to be totally honest. The IWM was relatively strong today. That's a nice downside tail into that 218, which was kind of an important area for the IWM. I remember when we were talking about this 218 back in early October. So we kind of held that today, but like I said, this is a day 4 to the downside. We were starting to really kind of extend down at lows today in the Russell. The Russell was somewhat relatively strong all day today as the TLT finally saw a little bit of intraday relief, though I guess actually still closed negative. So I don't know. The jury, I think, is kind of out on this one. It's very close to me on whether or not this looks like a day one of selling where we should expect further follow through tomorrow, or if this is another save here where the buyers came in at lows, they're closing us well. Tesla reporting and moving well after hours, then brings us back up. So no matter what, today's low, which also coincides with that super important SPY support level, is extremely important for going forward, and will certainly confirm whether or not this was a day one within the next couple of days if today's low breaks. Tomorrow could be an inside day, which won't leave us with a lot of conviction, but if you get the inside and down, or if tomorrow we just break the tail low, then it seems to be very obvious that we're starting to confirm the move lower. But there was enough buying and a big enough of a downside tail where it's not impossible that this is just a deeper pivot low into the equilibrium area. This is just a pivot low that's a retest of a previously important level that holds previous resistance that we broke out from, becoming future support, and then that's a wrap, and we work our way back up to highs. I really don't know. I really don't know. The jury's out for me. So we'll see how that plays out. As far as trading goes today was I thought a really fun day. Had a lot of really good day trades on overall. Nvidia to the short side was once again not always easy, but the hardest part for Nvidia to me was the degree of this bounce back. So I started shorting this thing here. Basically, actually no, that's not true. I started a feeler early, like a momentum. I took some momentum stock to see if we could get an inside and down off this first candle, first inside bar. So your first candle was a nasty kind of candle, a lot of relative weakness there. It was relatively weak pre-market as well. Obviously, it's strong on the daily chart, but we noted that there was weakness in NVIDIA yesterday also. Second candle was an inside 5. So I started to actually short much earlier than I normally would because I wanted to see if we could get downside momentum on the inside and down, like a 1, 2, 3 play lower on the 5-minute chart. But I said it out loud, the ADMA is nowhere near caught up to this. So the only way that trade works is on like a pure momentum style trade. You could have chosen to just stop yourself out when the inside 5 broke up and then reassess. That would be totally fine. For me, I didn't stop myself out there. The position wasn't so huge that I felt like I needed to. I could kind of manage it. I wanted to see what this thing looked like on a test of this ADMA to see if I got a pivot high. And off of that pivot high here, I took like a new trade or an add-on trade, whatever you want to call it, where I sized up off this pivot as it came down, and that paid really, really well. I covered my entire position actually into this down move, including what I wanted to leave as a runner, just because of the degree of downside extension into this move. And I said I will reshort on a bounce back basically to equilibrium. So I actually jumped the gun on that a little bit. I reshorted kind of well before the ADMA touch. I could have been a little bit more patient on that. But I wanted to get that feeler back. I wanted to keep that runner, I should say, back on my books, and I kind of kept the difference between where I covered on the extension and where I reshorted it. And then I started to reshort again into this ADMA on the daily. And by reshort, I should say add back, because we always want to differentiate add backs from like new shorts. So I started adding back a little bit more aggressively into ADMA. I got concerned on the break of this high volume negative Maribozu. It shouldn't be able to do that, even though it was a 15-minute correction. And even overshot the 15-minute correction. It overshot the 21 EMA on the 5-minute. I still managed to kind of stick with the trade there a little bit and took some adds here, but it kind of got a bit hairy. So I then covered, pretty aggressively into this down move. To then, I was kind of all out on my short again just by here, instead of looking for a bigger move. But this time I kept the runner, and I kept that runner all day, and I still have it here after the close. I seriously considered closing it at the close, but it's a small enough of a position that I did decide to keep it. So that was NVIDIA, a little bit hairy. I traded a lot of this fun to the short side off of the extension. I never got a move off this, to be honest. But I didn't have a super aggressive game plan, so when I got this moved down to lows here. I actually was fully liquidated per my game plan, and I never got back in. So it was a trade where I kind of was in it, looking for a bigger move initially, ended up just working these ranges pretty much the entire day, caught this bigger move, liquidated the position, never went back into it. So that turned out to be a decently profitable trade. I was trying to short DJT today. DJT and PHUN traded like very, very similarly. Just kind of off the extension, but this could easily give one more day here. And then it was the same deal. Like I had a, you know, like a core in DJT that was a little bit more aggressive than PHUN. Ended up just holding that core and kind of working this range all day. Caught, you know, a couple of these nicer down moves, and then reshorted the stock into the up moves. And at the end of the day, I just decided to liquidate the whole position. Not one that I want to keep. There's a lot of extension here. I could easily get a move back down to $32, which is kind of, I wasn't even that aggressive. I was kind of looking for a move back to like 33. But I was up enough money in it. The stock wasn't closing weak. So despite that extension, I decided to just, you know, cover the position in the close, and I can reassess it tomorrow. But it also ended up being, you know, decently profitable. At lows today, when the spies came in and held that super important level, we accelerated into those lows at 574.50. I was trying to figure out what I wanted to buy. Sometimes buying the SPY or the U-Pro is disappointing, I find, in how it trades. I didn't want to go after the IWM. Like I kind of wanted to buy the Qs, but I was short the Qs, so I ended up just buying some Apple for a bounce trade here. But I didn't look for a lot of reward on that. Just kind of made a few dollars, got out of the way. I got back into Tiger and Baidu today to the long side. Tiger, I am swinging some. At the end of the day, I'm kind of break even in it because I had a pretty good like initial price, like average price, a little bit above the $6, and was able to, you know, sell some into this bounce, and it closed around 6. So, you know, kind of break even-ish in it, but it's after this big break lower into this gap fill, the $6 area, I think is an important support zone. So kind of reestablish that position a little bit. And same thing with Baidu. Baidu 90 is really important. So Baidu, I'm negative on the day in it, but not by a lot, just by a little bit. And the level is important. The ADMA is up at 94. It could go down to 88. I'm not so big that that would be a problem. It could gap down to 88 or even below that on me. I'm not so big that that'll be a problem. But it's at a support level here where I'm willing to take a little bit more of a stab. So I got into some Tiger and some Baidu. I am swinging those positions, even though I've got, you know, flattish P&L in Tiger, and I'm down a little bit in Baidu. So you want to just make sure that if you're, I generally advocate for only swinging positions that are in your favor. I think everyone knows that by now, which isn't to say that I always listen to my own advice, but if I am holding a position that is not, you know, positive on me initially, I just want to make sure that my sizing is appropriate on it for me, so that I'm not in trouble if I get a, you know, $2 gap down in Baidu tomorrow. As a matter of fact, I can be in a place to manage the position properly and add and trade around it. So that's kind of where that's at. That pretty much covered my day. I mean, you know, I'm still very, very index focused. The Q trade was really interesting to me, just how weak this downtrend was during the day. I was almost looking at this like, this is the type of price action I'm looking for if we can actually break through the upper level of that like Goldman Sachs model for the systematic selling to potentially come in off like the CTAs. That's kind of what we've seen in the past. And I remember I was looking at this and I was like, wow, you know, we got this aggressive trend down. This is exactly what I want to look for if we break below like SPX 5700. But we're doing it above the level, which is interesting. So I wasn't super aggressive in like, you know, reshorting all these bounces, and that's kind of the play that I have in the back of my head for if the conditions look right and we really break through the you know, SPX level that we're paying attention to, which again is about 5,700 last I saw, a little bit above it. But this is like exactly the type of price action I'm looking for. But because we were above it, I was not being super aggressive about like shorting every, you know, pivot high into these moving averages, which is kind of what my game plan is for if I see us break that CTA tactical level. is to, try to aggressively short like every bounce on those days to see if we can get pretty much exactly what this downtrend looks like on an intraday basis. So we'll see if that happens. That probably only happens if today gets confirmed as an actual day one and we lose the key SPY 574 spot 50 that I keep talking about. That's all that I've got. I'm happy to take a look at whatever you guys have. Let's put this Tesla back on my screen. This is just make new highs. What did I just do? Sorry, I want to get this up on my other screen. It did make new highs. Interesting. Just reading what Bill posted on Ross Gerber. Calling for Elon to step down. Elon will never do that unless he's forced to. Yeah, sure, Adam, no problem. So, question from Adam that was actually from earlier in the day, but we'll talk about it in the afternoon meeting, was he was asking about the idea of a limit up, right? Like we have a limit down. Limit down is designed for risk management. So if you are down by your limit down amount, then you want to make sure that you are, stopping yourself out and not continuing to trade, because risk management is the key to success in the business. So the entire idea of trading successfully is to make sure that your losses are smaller than your gains. So whatever your limit down is, I like to just use simple numbers. Let's say it's $500. You want to make sure that your good days can be a multiple of what those bad days look like. And you also want to make sure that you never allow yourself to exceed that maximum loss. So $500, that's your cutoff. It gets a little bit tricky sometimes when you're dealing with open P&L from swings that you might otherwise be in the money on. So I kind of count that as new risk, like limit down, and then with swings, like that is separate because that's still risk from like a previous day that's ongoing in this trade, and ideally you're only even swinging it to begin with because you're in the money, so it's a win-win situation where you might give back some money, but giving back that open profit could mean that your day's P&L is beyond $500, but again, you really want to just be able to calculate that based off of the new day's worth of risk and not so much the swing. So that's a limit down. The idea of a limit up would be like, hey, if my bad day is that and Adam, I really hope you're asking this question because you made so much money today that you were thinking if you should give yourself a limit up. But the idea of a limit up would be like, all right, if a bad day is $500 and I'm up $2,000, it's like 4x a bad day. It's pretty good. Maybe I should just take my money and go home. I've never liked that personally because I think if you stop on the upside, then you're never going to see where you can get to. Who's to say that your $2,000 day can't become a $4,000 day, can't become an $8,000 day, a $10,000 day, a $20,000 day? That can happen. It is possible when the stars really align for you as a trader to really, really have everything work perfect and you have a greedy game plan because you're dealing with A+ trades or whatever it is, where you make significantly more than what your limit down is. And that could be what makes your month. That could be one of the days that makes your entire year. So I don't like the idea of just like, all right, my limit down's 500. Today I'm up 2,000, so I'm just closing out my positions and going home, because it limits the upside. The idea of trading is to limit downside, not to limit upside. At the same time, you do not want to allow yourself, if you're having a really good day, to go home negative. That would be inexcusable. If you're up $2,000 plus and your max loss is 500, you should never go home negative. You should not allow that to happen. The first thing I would say to you is the P&L that is in your trading software can be deceiving. I don't consider that to be your true P&L. Your true P&L is where you will be if like every trailing stop and stop loss that you have currently out hits. So maybe your screen is showing you that you're up $4,000, But if all of your trades pull back against you and trigger your trailing stops, then you're really only up $1,000. So you want to focus on, first of all, what is your worst case scenario P&L number always, and not necessarily what is your current open P&L. But then all the same, and then a common mistake that traders will make sometimes as well is let's say that you are worst case scenario is $1,000, right? And it shows that you're up 2,000. And then as a trader, you're like, oh my gosh, I'm up 2,000. I'm gonna push it. And then you put on another $1,500 worth of risk or something like that, and then everything fails. All the new trades fail, and all the trades that you currently have open pull all the way back, and next thing you know, you're down $500. That's inexcusable. You cannot allow that to happen. So what I advocate for is what I call a limit up-down, meaning instead of just limiting your upside and stopping on the way up, you ask yourself, well, I'm up this $2,000. How much of what I'm up am I actually willing to give back in order to make more? Am I willing to give back $500 or $1,000 of the 2,000 I'm up? And again, that 2,000 I'm assuming at this point is worst case scenario P&L. Am I willing to put on an extra $500 or $1,000 worth of risk off that to see if my $2,000 day can become a $5,000 day? I like that. Maybe that's how you do it. Maybe that's how you build out to these really, really big days, especially when the stars are aligning and we get the beautiful downtrend day that we're looking for, and you're reshorting every pivot high and pushing the P&L on all those new trades. But if your limit up down is hit, meaning you're up $2,000 and you decide to give yourself $750 worth of room, and now you're up $1,250, then you got to stop yourself out in the same way that you would stop yourself out on a limit down. And let me tell you, at that point, you're up $1,250. It's not a bad day. It's not a bad day for someone who's it's not a day that you should write home about, but it's not a bad day if your maximum loss is $500 to make $1,250 for yourself. But you're not going to feel good about it, and that's a trading psychology thing that we want to keep in mind. I can tell you from experience, it doesn't matter how good your day is, if you're not closing out at your P&L highs or near P&L highs, you're never going to feel good about it. So a mistake that traders will make, and I've done this myself, is all right, I'm going to give myself this limit up down at $1,250, and now I'm at $1,250, but I say screw this, I was up $2,000, I got to get back to that $2,000, and then you keep trading, and the next thing you know, you're right on the day. I've done it. Don't do it. So that's another hazard there that you want to keep in mind. It's the same way, like, who here, raise your hand, I've done it, who here has ever had a day where they were getting absolutely smoked, trashed, having a really bad P&L day, and then you fight back and you finish down like flat or down really small on the day? It feels great, doesn't it? It's like you just lost money today or didn't make anything, and you're like you feel so good about the fact that you didn't lose any money. It doesn't make any actual sense, but that's how we feel, again, because of trading psychology. It was so bad there for a minute that I closed flat on the day, and I'm so happy with it. It's not necessarily right, but it's the way that we think and feel. It's the exact same way on the opposite side. You were having like the best day you've ever had of your career, and then you gave back a bunch of that P&L to close at your limit up down number. You're not going to be happy, but don't get in your head. Don't try to fight back to get back to that high mark on the day and risk turning what's still a pretty good day into a day where you go home negative. So I hope that helps, Adam. I appreciate the question. Let me know if you have any follow-ups. Popping over into the YouTube from yep, no problem. From Robert, how can we calculate expected measured move for stock before the earnings? Sure. So one thing you can do is you can be in the VTF and ask Pat. That's my preferred method. The other thing that you can do is there's a website called Options Slam where you can just get a quick look at it. I think it's called Options Slam. Let me type it up in my other screen. Options Slam basically can calculate it for you. Let me just go in here and type in Tesla. Yeah, Options Slam here showing me that the measured move is 7% in Tesla for this week. It's another thing you can do. And then the final thing that you can do if you have options access in your trading is what Bill just said here, which is you can add together the put and call premium for the at-the-money strike. So whatever the strike is that's closest to where the stock is currently trading, you go to that, you look at the price that the put is trading at, look at the price that the call is trading at, you add those two numbers together, and that's actually the best way to calculate the measured move. But I like the old ask Pat in the VTF style, personally. We got Pat being sarcastic in the VTF. Thanks, Robert. I hope that helps. The selling was pretty orderly, but the bounce back was very strong, just off of Cyril's comment. I was told there would be no math in trading. From you, Vixie Bull. I know this is an edge case, but I think one exception to the limit up is that if the money is significant enough to change your life's trajectory, then at least lock in some profits by moving the stop up. Okay. I struggle to do that. I've had some really, really big days over the years where I've given it back. But, you know, just because for me I'm such a stickler to the rules. But I get it. If you're up a certain amount of money that can really be, you know, significantly change something for you, then it might just be worth it to close out the positions, walk away, and pick it up again tomorrow. The flat days after $3 away from daily lockout feel the best. Yes, yeah. When you're so close to lockout and you end up flat, feels the best. Someone in YouTube is saying that Thinkorswim can also show you the expected options move. Okay, I don't use Thinkorswim, but there's another option for people. Yeah, Kevin, for sure. For sure. So we've all been in that spot where you're down so much money that you're just like pleading with the trading gods to please get my P&L back to break even, right? It's not a good spot to be in, that's for sure. What else, guys? Anything else for today? It was an interesting day. Happy to talk about it. Happy to answer any questions. Oh yeah, the TSM was on my radar this morning, but I ended up not trading it. From David L. I liked this TSM day 4 of the price correction off of the good earnings report, where it's finally gapping down into the ADMA on the daily. I don't like to trade this stock. I've always found this name to be tricky to trade with the gaps, whatever. Maybe I'm a hypocrite because I'm in Baba, Baidu, JD, who also trade kind of similar to that, but whatever. I've always kind of avoided Taiwan Semiconductors. But I loved this as a technical spot here. Look for the long off the open. It worked great. I think Rex was all over this idea today. I hope you crushed it, Rex. But David commenting, TSM moved well today, but I need to work on my sizing overall and recognizing breakout trades. It had a nice second retest of 200. Okay. At 1040. I think that's a very hard buy. Which I thought was another range-bound short trade, but okay, so it's short. I could see that also. I mean, thing just ripped from 196.50 to 200 almost in a straight line back to what was opening resistance today and resistance yesterday. I don't hate the idea of trying this short here at 200, but it blasted through it, so, you know, make sure you got your risk managed. But it broke out for a $3 move to the upside. I stopped out. Okay, that's good. But I need to work on having the awareness to flip long. I think this long is very hard. I'll be honest, I kind of like the short better than the long. I know in hindsight we can look at the chart and be like, oh, well, the stock went up another $3. You should have just been buying it. I'm looking at a stock, like I just said, that ripped $3.50 in a short period of time. It's extended to the upside, let alone the fact that it went from extended down to extended up in that short period of time, into resistance from earlier today, into resistance from yesterday. I don't hate the idea of looking for this short and I don't like the idea of buying it at 200 because I feel like you're chasing the long. With that said, when you're analyzing taking the short, you gotta pay mind to the big picture, and to me the big picture, I like the long. So that usually means to me that I don't want to be trading it to the short side at all, because big picture I like the long. With that said, it doesn't necessarily mean that I'm going to buy and chase through 200 either. I don't like that long here, to be honest. For the same reasons why I think the short is okay. It just fights the big picture, which I don't like. I don't like the long, even though the long is with the big picture. It's just that you're chasing after a $3.50 move when the stock is going to trade through 200 with the ADMA 70 cents below it on the 5-minute chart. So I don't love the flip long, to be honest, regardless of what it did after the fact. Sizing is a huge important thing. Obviously, sizing needs to be based on you don't size up your amount of stock that you buy. You size up your dollar risk that you're putting on, right? Which inherently will size up equal trades. That's how you get bigger over time. Thank you for the commentary there, David L. I do appreciate it. All right, well, I'm not seeing any new questions or comments coming in either on the YouTube or the virtual trading floor, so I'll wrap it up there. If you're watching in the YouTube, give it a thumbs up and tell all your friends. If you're in the VTF, you know that you're already in the place to be because you're getting all the information as we're talking about it. So, really good stuff today overall. I think we had some great trading going on today, some great ideas. So, yeah, that's it. I'll see everybody tomorrow.